A lot has been made about the CCP and Chinese stocks recently. Since the failed Didi IPO, the failed ANT Group IPO, the eradication of profit in the education sector, and the seemingly random fines and restrictions placed on other companies like Tencent and Alibaba, stock prices across the entire Chinese market have been dropping. If you had invested in the biggest names in China last year, then the chances are you've lost a lot of money. And Cathie Wood has not been immune to this. She and her fund, Ark Investment, threw themselves headfirst into Chinese stocks, seeking the high returns her fund has become famous for, only to get stung multiple times by the CCP. Now, I'm going to do my best not to bore you today. You've no doubt heard about how Cathie abandoned her previous picks, how investors all over the world ran away from Chinese stocks after underestimating the regulatory risk that the CCP posed. But what is news and what you might not have heard about is how Cathie is strolling right back into the jaws of the beast. She's increasing her positions in some Chinese stocks once again, under the assumption that this time she'll get it right, that her picks will not be targeted by the CCP, and she won't find herself running away with her tail between her legs. The only problem is that Cathie is looking at this from a logical point of view, and the CCP, an authoritarian regime, is anything but logical. Of course, Cathie being Cathie, she went on Bloomberg TV and gave us all a great 20-minute interview where she explained her point of view and justified her renewed investments in China. Now, I've taken the best bits out of this interview to show you guys what's going on, and then I'm going to go on and give you my 2 cents on the whole issue. But really quickly, before I show you that interview, consider subscribing to the channel, liking and commenting on the video. It helps me out more than you know. I'm not going to hold back any punches here, and when I talk about China, the CCP and the immorality of it all without censoring myself, advertisers have a tendency to try and punish me for that, so any support you do show for the channel is greatly appreciated.
We've been talking a lot about Chinese stocks and you getting back into it. Talk to us a little bit about your thinking right here, because it was just last month that you pulled back on your exposure and were selling. What changed?
Sure. Yes. So thank you for inviting me, Carol.
Yeah.
Very happy to be with you again. So we had been pulling out of China. We started last November, actually, after the debacle around the ANT Group IPO and really the banishment, it seems, of Jack Ma. And we saw increasing signs that the government was going to get tough on companies. We didn't know and companies which were more than unicorns. They had exploded onto the scene, and they had become so powerful, as had their leaders, that they almost seemed to be threatening the government. At least that seemed to be our take on the government's response. So we were a bit cautious, pulled away, and in fact, our flagship fund has moved out of most Chinese stocks. I think we were out probably late April, late May, somewhere around there. It might have been a little bit later. Gradually, you never know 100% of the time. I think the online education, really nationalization there, was a real valuation killer for the market. So I think that the market's going to be under pressure from a valuation point of view for a long time now, because that sort of thing was so unexpected. Even from those of us who saw the government tightening its grip on the country. But what we have done, we did after this last bloodbath in the stocks, we did try and sort through, okay, which companies are doing things the government likes.
Right.
And what we're seeing are those that are catering to tier 3, tier 4 cities, logistics, groceries. So you've seen us buy JD.com. JD Logistics is a big part of JD.com. I think they own 70% of it. So that's probably been our biggest purchase, as well as some Pinduoduo for the same reason. But if you were to look at what we were doing in those portfolios, we were really swapping them out of other names that we think are going to be continue to be in harm's way, or certainly under government pressure, like the Alibabas, for example.
Which you've been selling, correct?
Yes.
So in terms of the recent crackdowns, Cathie, that we've seen, does it longer term generally make you more pessimistic or optimistic about investing in Chinese stocks? What's the call here? You're a longer term investor. So what's the longer term play here?
Well, if you think about what China is doing, they're doing many of the same things our own government and other governments around the world are doing. Most governments are concerned about data privacy, national security, and even concerned in some ways about the impact of social media on students and so forth. So, but we just haven't. We don't have the kind of centrally controlled government that can, wipe those activities and risks off the face of the earth as much as possible. That's just not who we are. We do know that China wants to be number one in the world, and economically, certainly. And one of the ways they want to do it is with innovation, with technology. They want to bring more of it back into their country.
So Cathy gave us a pretty good rundown of what has happened over the last few months and how she plans to avoid the mistakes she made when investing in China previously. Obviously, this all started last year when Jack Ma, the infamous founder of Alibaba and Ant Group, basically disappeared and was feared dead or imprisoned. He had the audacity to speak out against the competence of the Chinese Communist Party, and they punished him dearly. We do now know that he wasn't killed, though he was sufficiently defanged, with his positions of authority in his companies taken away from him, and his companies themselves punished for his misdeeds. But this trend of the CCP throwing their weight around continued. The ANT Group IPO was cancelled out of the blue just a couple days before it was due to go ahead. Didi, the Uber of China, was punished for daring to IPO in the United States as opposed to China, and the entire education sector was nationalized overnight. Tencent, who are basically the largest video gaming company in the world, were a little bit surprised to see that the state will start doing everything in its power to stop Chinese kids from spending too much time online. And that was after a ridiculous donation at gunpoint of $15 billion from the company and its shareholders to the Communist Party. Now, Cathy's perspective here is that these companies, the Alibabas and the Tencents, are too powerful for the CCP to ignore, and that's why they're being targeted. They have too great of an influence on the young in China, they're too profitable, and they control too much data to be left to their own devices, and that will keep their regulatory risk too high for Cathy to invest in them. Other companies, however, that focus on logistics or groceries like JD.com are less likely to be targeted by the CCP, according to Cathy, and that makes a lot of logical sense. After all, who's more of a threat to a government? Twitter, with their ability to reach billions of people at a moment's notice, or Whole Foods, a company that sells groceries? I can see why Cathy thinks there isn't a risk to investing in these sorts of companies, but Cathy is making one critical mistake. She is trusting a murderous, genocidal regime to be logical. Pretty much the oldest form of socialism in the world was the grain dole from ancient Rome, where the state would subsidize or even give out free grain to its citizens, basically to buy votes and their support. There is no doubt in my mind that if the CCP thought they could increase support for the state by removing profit from the food or agricultural sector, that they would do it in a heartbeat. They, on a dime, did the exact same thing to the education sector, eradicating billions of dollars of wealth in an instant, and they are absolutely capable of doing it to other sectors as well. Maybe they decide that the reliability of the logistics and supplies of the country are too important to be left to capitalists. The simple truth is, no one knows how far the CCP are willing to go, but those who have bet on them being dovish in the past have so far been proven wrong time after time.
So more pessimistic about China long term or more optimistic?
I'm more optimistic.
Okay.
I'm going to turn it around a little bit. I'm not pessimistic about China longer run because I think they're a very entrepreneurial society. Sure, the government is putting more rules and regulations in, but I don't think the government wants to stop growth and progress at all. What I will say, though, is I'm a little more optimistic about the United States and other economies. So it's more of a relative sort of thing. The more insular China becomes, actually, the less competitive in many ways it will be, because artificial intelligence, sure, you can have all kinds of data about your own population, China or
Right.
Chinese government, But in order to compete in the world, you're going to need information everywhere. And I think governments around the world are a little suspicious of what is happening now in China.
What do you think the investment environment will look like in China in 5 years from now compared to what we're seeing today? And because investors, everyone follows what you're doing. So are you positioning for the 5 years from now?
Sure. We have a 5-year investment time horizon. I think we're consolidating into the few names, and these are not in our flagship fund. These are in other of our more specialized funds. So we're consolidating our position. So we've taken it down, continued to take it down, but consolidating more towards with higher positions in names like I described. They're, really focused on tier 3, tier 4, groceries, logistics, manufacturing in China. So we'll stick with those while we wait and see, how the government wants to play this. If you think about it, one of the reasons this may be going on now is China saw what the Trump administration was like, and the Biden administration has been just as tough in some ways, but perhaps not as tough as a more conservative or hawkish administration would have been around Hong Kong. And so we've got the midterm elections in November next year. So this is their window to do what they want to do, because I do believe they're feeling like this is a little bit of a window, and if the more hawkish administration gets in later, then they will want to have done whatever it is.
So Cathy went on to hedge there a little bit and state that while she may be optimistic about China, she's more optimistic about the rest of the world. She also made it clear that if China continues down this road, it will suffer in productivity, entrepreneurship, and innovation, and she is absolutely correct. The wealth that exists in China today was built by capitalism, not by the CCP. It was built by the young, ambitious, and driven entrepreneurs who went out there and created their own luck. The more China removes the profit incentive, the more they punish companies for being successful, the more they will diminish their own wealth. Finally, Cathy did actually say something very insightful that could go some ways in explaining her newfound positions. The Trump administration was very strong against China, and it was not afraid to challenge them. In comparison, Biden has been weaker at almost every opportunity. He has neglected to challenge China despite what have been more than adequate provocations. Cathy thinks that the CCP might be fearful of another hawkish administration like one under Trump, where they wouldn't be able to get away with the same overtly authoritarian acts. She thinks they could be acting quickly to try and get their desired regulations done before a stronger government comes into power in the US and they are unable to act with impunity. If this turns out to be true, then it's perfectly plausible that China becomes more dovish in the future. Now this does sound possible to me, but the truth is, I need to do a lot more research on the topic before I'm able to tell you guys what I think is the truth. There is so much nuance at play here, and there are so many other potential reasons for the sudden change in the way the CCP has been acting. Maybe they've realized that after the release of the virus, they are no longer seen as mostly harmless, and so there's no point in pretending to be harmless. Maybe the CCP was scared by the power the tech giants have shown to have in the US, where Twitter banned the sitting president of the United States, and the rest of the giants joined forces to push Parler out of business. I'm not saying that I think Cathy is wrong here, but I am saying I don't know if I think she's right. For full disclosure, as usual, I will personally never invest in a Chinese stock due to my moral concerns. I do not want to be invested in a market that stamps on democracy in Hong Kong or tries to erase an entire culture in Xinjiang. And no matter how much money might be up for grabs, it will never be enough to convince me otherwise. If you're new to the channel and you enjoyed this video, then make sure to subscribe. If you want to help spread the word, then consider liking the video and leaving a comment. The truth is that every time I make a video that's less than positive about China, my advertising revenue gets cut down. So I really do appreciate all the support you guys give the channel, even if it's just leaving a like. If you want to help out further, there's a link down below in the description to BlockFi where you can get up to $250 in free Bitcoin on top of interest of whatever crypto you hold. If you're a hodler, you really should be getting paid for it, so make sure to check that out. There's also a link to my favorite brokerage called eToro where you can trade stocks, shares, crypto, commodities, foreign currencies, and more, all for 0% commission, so make sure to check that out as well. Thanks for watching, until next time.